What's up, guys? Jay Martin here, investor and host of the Jay Martin Show. And my guest today is Andrew Kiguel. He is the co-founder and CEO of a company called Tokens.com. Now, why do I want to talk to Andrew today? Because I am watching this flood of capital rush towards the metaverse and metaverse development of property and assets, etc. And the investor in me needs to know if I want a horse in this race, and if so, what that horse might be. So the reason I wanted to talk to Andrew was because Andrew believes that his company, Tokens.com, is a proxy for investing in metaverse development, meaning it's a publicly traded company that share price could perform similar to development of the metaverse, generally speaking. Now, the reason I want to hear this from Andrew is because he's actually done this before. Back in 2017, 2018, buying crypto was actually kind of complicated for the average individual, not nearly as easy as it is today, right? Only 5 years ago. So what Andrew did was create a company. He co-founded a company called Hut 8 Mining, which today is one of the largest publicly listed Bitcoin miners in the world. But what Hut 8 really did was provide investors a proxy to invest in Bitcoin performance without having to buy Bitcoin. They could invest in this publicly traded company. The share price would often track the price of Bitcoin. If you invested in Hut 8, you did very well. I didn't, but I invested in Hive blockchain, which performed very similar during that time period. Now, today, buying crypto is easy. Anybody can do it. But investing in the metaverse is hard and complex, and it's confusing. So I am looking for a proxy to invest in the development of the metaverse. Andrew claims that Tokens.com is that proxy. Now, I'm not convinced that it is, but I had to hear it from him. Now, he's invested a ton of cash in developing real estate in Decentraland right now. I wanted to hear everything else that he's up to. 3 things before we jump into this interview. Number 1, I publish a weekly newsletter and it's free, where I share my biggest takeaways from conversations just like this, and more importantly, any action I might be taking in the market as a consequence of what I've learned. You can subscribe by hitting the pinned comment right beneath this video, or just go to jmartin.club and all the information's there. Number 2, ad revenue from this YouTube channel is donated to an organization super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness, and they do a great job. Number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, here's Andrew Kiguel, the CEO of Tokens.com, on why he thinks the metaverse is a multi-trillion-dollar investment opportunity. Enjoy.
This is Jay Martin.
All right, what's up, guys? Jay Martin here, investor and host of The Jay Martin Show. And I'm joined right now by Andrew Kiguel, the co-founder and CEO of Tokens.com. Andrew, thanks so much for coming to chat with me today.
Thanks for having me on, Jay.
I'm looking forward to it. So maybe for anybody who's not familiar with Tokens.com, could we start there? Give us the highlight overview. Who are you, Andrew, and how do you spend your time?
Right. So I was an investment banker for 20 years. And back in 2017, I saw that there was a need for public market investors who really wanted to get exposure to things happening in crypto, but there wasn't really a regulated way for them to do that. There's a lot of what I would say people with fear of missing out, people that want to get involved, but it's intimidating for people. So the thought process that I had was to create a Bitcoin mining company that held all of its Bitcoin and take that public. And by virtue of that being public, it would give people that option to access it without actually having to buy a crypto mining rig themselves or figure out how to buy Bitcoin themselves, because it's still fairly intimidating. I ended up leaving my career in banking. I became the CEO of this company. It's called Hut 8. Today trades on the NASDAQ, and it's had a market cap as high as 3 billion. And it's one of the world's largest Bitcoin miners. And the philosophy that I had again was like, let's create a product that is accessible to people. People are still very much accustomed to buying and investing through their existing portfolios. I then started looking around and saying, what are other cool things happening in crypto that are not Bitcoin that investors might want to take advantage of? And I saw all these things like gaming and NFTs and metaverse happening. And I said, let's put this into a public vehicle, create businesses around it, and give people exposure to that. Because again, it's intimidating. Most people have heard of the metaverse, but they may not know how to go in there and buy land or throw a party. Most people have heard of DeFi, but how do they take advantage of it? And things like non-fungible tokens or NFTs, like how do you buy a CryptoPunk? How do you store it? How do you report it? So that's really what I want to do, create an easy way for public market investors to get exposure.
Yeah, it's such a valuable business model. I've made a lot of money investing in proxies like that, right? Like if Hut 8 was a proxy to investing in crypto, back when investing in crypto was a lot more difficult, right? 2017, it was a different process. You couldn't just hop on your Coinbase accounts and hit buy.
But even today, if you look at when the Bitcoin ETFs were launched in Canada last year or in the US last year as well, billions of dollars flowed into those products. Even though there's so many advantages to owning Bitcoin directly, if you own Bitcoin yourself, you can trade it 24 hours a day, 7 days a week. You can earn yield off it. If you own it in a fund, you can't do anything and your liquidity is limited. Yet billions of dollars still flow into these products because people like doing things in a way they're accustomed to doing. It feels safer and easier.
Okay, so you've been through this, or you saw this materialize in 2017, right? You're seeing it again. People are getting really excited about things that they don't really understand yet. Maybe that's the metaverse, NFTs. And I put myself in that category, by the way. I'm not any expert. I've strolled around Decentraland, tried to see what's going on in there. But like, how do I action my move, right? That's a question mark for me. I don't have that answer yet.
Right. Well, that's where we come in and help out, right? And so we're more, being a proxy for that is for sure something we do, but we're doing even more. So in a place like Decentraland, we dropped a few $1 million on buying stuff in the fashion district, and we're now holding this massive fashion show that's going to have major brands and musical artists. That's not something that's really within the capacity of any individual to do on their own. I mean, maybe, but we're sort of developing that expertise in building businesses around these assets that are very valuable.
Could I dive into that transaction a little bit? So you said you spent a few $1 million, bought a bunch of property in the fashion district of Decentraland. So maybe to back up, if any of my viewers aren't super familiar with some of those terms, Decentraland is a metaverse, right? How would you describe a metaverse to someone who's never experienced the metaverse, Andrew?
So the metaverse has a lot of different definitions, but I can tell you my definition is a video-like game environment, which you wander into a city and you create an avatar that you use to wander around, and you do it through your computer. Now, metaverses have been around for a while. If you think back to things like Grand Theft Auto, the video game, or any of those third-party shooter games, those are metaverses. Roblox, Minecraft, those are metaverses. Even Second Life could be considered a metaverse. So a video game-like environment where you can interact with other people's avatars all through your computer. Okay.
Now, you've purchased property. And sorry, so how a metaverse differs, though, from like a Sim City or I'm probably dating myself with that. I don't know if people still play that, but Grand Theft Auto, how a metaverse differs functionally in terms of ownership and property development. Touch on that for me.
So a unique thing has started happening, and that metaverses have started adopting crypto technology or Web3 technology. Previous attempts at metaverses have been relatively successful, but they're termed digital prisons. And I'll explain to you why. If you go into The Sims or Second Life or even Roblox, there's a company behind it with a CEO and a group of design people, and they create what they think you want to see. They create the games, they give it to you, and you go in there and play it. You can buy and spend money within those metaverses, but whatever you do in there doesn't actually belong to you. It belongs to the game, and all the profits from the game go back to that company.
Yeah.
The new metaverses have a whole different philosophy. They're about creating and building communities. And this is what's very different. Using crypto technology where ownership, digital ownership is available, you can sell plots of land. And then it's up to the user, the owner, to determine what that content is going to look like, what the community is going to look like, and if they want to find ways to monetize off that land. So let's take Decentraland as an example. Decentraland has approximately 90,000 available plots. Okay. It's a rectangular city. Each plot is equivalent to 52 square feet. Okay. Easy. Of those 90,000 plots, approximately half of them are untouchable. Okay. They're left aside by the foundation. And the reason why is those are your parks, your rivers, your fountains, your sidewalks, the things that make a city look like a city, because a city is not just buildings piled on top of each other. So 50% of the space is what I would call beautification and sort of space for people to walk around. The other 45,000 parcels are available for people to develop on, and they're already owned by various landowners, and they can choose what they want to build on those. It's like a community. It's like going back in time and building a city. What do we need? An amusement park? Do we need a casino? Do we need a mall? We're determining that as we go along, and we're part of the governance of that city. Any profits that are made through us using that land don't go back to Decentraland. They belong to the landowner, just like they would in real life. And that's the difference, is these new metaverses are creating self-contained economic communities that are based on this digital asset ownership. And that's super cool, I think, in terms of how the whole process of what a metaverse is. And that's why I call the other ones digital prisons, because you really don't have a say in what's being built or how your money is being spent.
Right. Okay. Now, so talk to me about your plans. Did you purchase 116 lots? Do I have that number right? Am I close?
Yes.
Yes. Okay.
We've purchased more since.
You purchased more since. Okay, sure. So of the 90,000 that you described, and there's a handful that are protected lands, like a national park would be, right? You're never going to develop, put a condo up there, which adds some scarcity to the available lots, right? Now you're moving in now and purchasing real estate at what I would expect you to say is going to be ridiculously cheap 10 years down the road, right? You're buying Las Vegas before it was Vegas. Is that what you?
Right.
That's the thesis.
Well, let's just look at some of the statistics. The visitor traffic in Decentraland, registered users last year grew by over 3,000% in the year. It's currently growing at around the same pace. So they went, I think last year, they're up to about 800,000 registered users. They're going to break 1 million and probably get into the several million this year. We own a whole bunch of land there. What does that become worth when there's 30 million people wandering around this environment and using it as a way to socialize or attend concerts or go to museums? It's going to continue to become more valuable because it's a way for brands and advertisers to access this brand new demographic, this new user base of people that wants to spend money in the metaverse.
Now, can I ask you a question? What do you think is the biggest mental block for individuals who maybe aren't gamers, right? And they have maybe seen some video of the metaverse, or it's been described to them, and they can't in their mind understand why a virtual world would have tangible value. How do you answer that?
So there's definitely a whole portion of the society that doesn't understand that unless something has, like, they believe that in order for something to have value, it must have something you can hold, must have weight.
Yeah.
I don't argue with those people. Certainly that is their belief, but it's a really hard breakthrough for them to understand that something can be scarce, irreplaceable, and only exist on the internet and have value. It's a really hard thing for a lot of people to sort of cross. The younger generation doesn't have a problem with it. They get it. They can understand that you can have something digital that has value. Another part of the population just doesn't get it. And I don't try to argue with them. I'm not the metaverse or crypto town crier trying to, evangelize all this stuff. There's a whole ton of people that believe it has value. The crypto industry is now going into its 14th year. It's not a fad. It's not going away. It's actually crossing into more of the mainstream, more into daily use cases, just like the internet did. So what I would say to people that don't believe it, do the research. Don't be that person that said the internet was a fad. Don't be the person that said social media is a fad. These events are happening right now. Every major corporation in the world right now is developing and deploying a metaverse strategy. I just say, do the research.
Well, yeah. And when you say every major corporation, you could find examples like Nike. They've now trademarked their swoosh. They've trademarked Air Jordans strictly for the virtual world. McDonald's, I believe, recently as well, right? Trademarked the arches in the metaverse.
Walmart, JP Morgan just opened up an office in the metaverse. Samsung, Sotheby's, Balenciaga, Gucci. You got a whole host of different performers and DJs who are performing and dropping music in the metaverse. Microsoft, Apple. I mean, when I talk about every major corporation in the world, I mean, just pick the top 20 and most of them are building strategies there. And let me provide a bit of the rationale as to why this is important. And I think this is a key part. I was having a conversation with the CEO of a major running shoe company last week, and he asked me, well, how much money am I going to make by opening up a store in the metaverse? And I said, no. It's not about how much money you're going to make. You're missing out a key part of what you're going to be doing here. The new generation doesn't watch TV, which means all of those ads don't go to them. The new generation doesn't go to Rodeo Drive or Yale Town or Yorkville to shop. They do their shopping online. They don't read newspapers. They don't read magazines. So how does a kid understand what the difference between Gap and Gucci is? They get their understanding from places like the metaverse and social media. And the metaverse is really just the next iteration of social media. It's a place where people congregate, socialize, and talk. What I said to the CEO is, think about this as the longevity of your brand. How are you going to continue to communicate to people what your brand represents? If you remember, when I was a kid in high school, you'd go to the mall. Each brand represents a way of how you want to represent yourself to the world. But I would learn that from seeing commercials, reading magazines, newspapers, and going to the mall. Today, those things don't exist. The entire advertising, the entire teaching people what you're about has been reversed. The model has changed. What the metaverse represents is a way for brands to communicate to people who they are, how they should feel when they're wearing or using your product, and why they should buy you. These are key things. They have to go to the metaverse, because how else are you going to reach this demographic?
And that's like the key opportunity, right? Is how else are you going to reach this demographic when you're talking about the generation of, call them digital natives, who grew up, digitally integrated. It was never something they had to learn, right? It's endemic, correct?
Yeah, I mean, look, my family laughs at me. I love cable television. I'm in my 50s and I just grew up watching TV. So I'm constantly being served ads and I don't mind. The rest of my family thinks I'm completely wacko, because they're like, why, like, cable TV? Why? You can go to the streaming services, you can download stuff on the internet. I'm part of that old generation. But for them, they don't understand, like, how do you learn about stuff? And I just think that's a very important point for people who are trying to see, like, what is the value of the metaverse? You have to appreciate the fact that the standards of advertising and communicating are changing, and they're changing very rapidly. You have to adapt or you're going to miss out. Just like a lot of companies said, I don't think we really need a website. Don't see the value in that. Those companies probably didn't survive. Every single company in the world now has to have a website. It's just part of not just making sales, about a place for people to get information as to who you are.
Yeah. Okay. No, everybody can relate to that. And I would say yes, but we know, during that .com rush, like 80% of the initial companies that were promised to be exciting didn't make it, right? There was this, and that's a market cycle. You got to have those corrections to find the winners, right?
Sure.
So how would you counsel an investor right now, Andrew? Somebody like myself, okay, I'm looking, I know I want a horse in the race, right? I can see sentiment shifting. I see smart money rushing that direction. I see the avalanche of cash. I want to put myself in front of it, right? And so what are my options right now? And maybe tokens.com speak to that, but what else? Like, what are the proxies to have a horse in the race when you don't know enough to be super aggressive?
Well, I think you've identified the options. I mean, you can go and do the work yourself. It'll take you a long time. This is like, if you're going to go out, for example, in the metaverse, you got to study what each metaverse is about. You got to understand the neighborhoods, how much you're paying. The land is not sold like a commodity. It's not like every plot of land is $5,000. The plots are already owned by various people. They put them up for sale, and they all have a different valuation based on what has sold in the neighborhood already, who the neighbors are, what neighborhood it's in. If you're trying to do this on your own, you got to be prepared to spend a lot of time to figure it out. It's not like hey, let's just jump in and do it. Be prepared. Then after you do it, how are you going to rent it out? This is not like, this is a developing marketplace. It's not like, hey, I got to build something here that somebody's going to want to rent, and then I got to find the renters. Where I'm going with all this is it's a lot easier to do and get your exposure through something like tokens.com, where we're doing all that work for you. And I haven't even talked about security. Remember, all of this land, all these assets reside on the blockchain. It's crypto based. If you don't understand how to properly store this, you could get hacked and have it taken away from you. So these are all the things that we do. By buying this land, by holding this big fashion show, by having the ability to create and design this stuff, we're providing a proxy for investors to say, I'll let them do it. I can buy it through my normal account. I don't have to create online wallets and wire money to different places and figure this out. So certainly you can do it on your own. That's a lot harder. Or you can do it through us and you have that liquidity through the stock market.
And is it a fair parallel to say, you're a property developer and a landlord to describe your business model in the metaverse? Is that accurate?
Yes, but we're also more. And I'll tell you how we're more. We're also a little bit like Facebook or Google in that we're collecting digital advertising revenue. And so on one of our properties, we built an office tower called tokens.com Tower. And right now we're negotiating for people who want a frictionless way of advertising in the metaverse. We're selling digital billboards. And so that's recurring revenue where we will build something for you that maybe takes people to the website or builds brand awareness, several different reasons. But that model to me looks a little bit more like Facebook or Google than it does a traditional real estate company.
Yeah. Okay. So through passive advertising opportunities in the metaverse, assuming that the growth in foot traffic will continue, you mentioned 3,000% per year. And it's easy to...
I don't know if that's so. To be specific, the exact growth rate for visitor traffic and users in Decentraland was 3,300% last year.
Okay.
I don't know where it's going to go into the future. I can tell you that from what I'm seeing so far in January and into February, the growth rates are continuing at a similar clip.
Okay. And as somebody who's experienced Decentraland as a pedestrian, strolled around, I would say I could understand how somebody could do that and think, well, there's not much here because, it was kind of like walking around an empty Las Vegas. There wasn't a lot of people there at that time. The fidelity wasn't amazing, but we get stuck in these linear thought processes when it comes to tech, which doesn't develop linearly, right? So we know like, what's this going to look like? I guess that's the question that I try to ask when I go in there and experience this. And I'm like, I'm 37, like maybe I'm not the demographic, whatever. It's not super exciting to me, but then I have to think, hey, but what's it going to be in 3 years? What's it going to be in 5-8 years? And what's that experience going to be like? How compelling and seductive is that going to be? Probably 1,000x more so.
Yeah. So I think there's two things I want to talk about with respect to that point you made. The first has to do that the metaverse today, what's driving it is our events. If you go into Decentraland right now, you might find a few thousand people wandering around and, there's an arcade and there's a casino. That's not really the drivers. The drivers are the events. And when Decentraland had a dance music festival back in October of last year with the top DJs in the world, that event attracted over the 3-day period, over 50,000 unique visitors. Okay. So this is all people who have a shared love of electronic dance music, who are geographically potentially scattered all over the world, that met up to hear their favorite DJs perform, experience an event that felt like a digital Coachella or like attending a club in Ibiza or something like that. There were various stages and people, and you could talk to people, add friends. That's a shared experience that you can have with your friends, regardless of where you are geographically. That's part of the experiences. For other people, it might be meeting up with other people and checking out an NFT museum or an amusement park. The Australian Tennis Open opened up a whole facility where you could go and watch games live or even previous games, championship games. So for people who don't have cable or maybe don't live in Australia and want to watch some of these games, you could go into the metaverse and watch, and there's some other immersive experiences. Sotheby's is doing auctions. They replicated their Bond Street auction house and they're trying to hold live auctions in the metaverse. So again, event driven. Wandering in there today is exploratory, could be fun. It teaches you how to move around and do things. When the fashion show happens next month, I think that's going to attract several 100,000 people, because you're going to be curious to say like, oh, this person is performing at an after party. I want to check it out. Or there's a brand that I'm aware of is holding a catwalk. I want to go see what this is about and how this works. And so these are the types of things that are going to draw people in. Because from going to Decentraland, especially if you're playing as a guest, it takes you 30 seconds to get in there and create an avatar. Just need a decent computer and you're in. It doesn't really take a lot of information. To your point about the graphics and what it looks like, there's actually intent in the way it looks and the graphics. And let me explain why, and I'll give you a very good example. I don't know if you have children, but are you familiar with Minecraft?
Yes, my kids are too young, but I'm familiar. Yeah.
Okay, so Minecraft looks like a bunch of Lego blocks put together. The quality of graphics is quite poor, yet it's a highly addictive game for kids. One of the reasons why Minecraft has not bothered to improve the graphic quality is because at this level of graphic quality, it is accessible on a wide range of computers, regardless of how old they are. The higher the resolution of your graphics, the better processor you need, the better graphics card you need. And so if you make something that is too good, too smooth, you're going to narrow your audience to people that have the latest version of computers. One of the things I like about Decentraland and Sandbox is that they're sort of aiming for the middle. The graphics aren't like the best you've ever seen in a video game, but they're pretty good. You can recognize things and you can dress up, and there's various things you can play and do that are fun. As the technology catches up, and this is why I say this is a multi-trillion-dollar business, you're going to have new graphic cards, you're going to have new hardware and things that are faster that will allow these metaverses to improve the quality of what they're delivering to the users. Right now, though, unless you want to, decrease the number of users you have, you're going to keep your video quality and your immersion experience where it is, because it gives you the widest appeal.
Right. Okay. You're protecting accessibility.
Correct.
I get that. Okay. And I could imagine maybe down the road, you segment accessibility or quality based on what you're willing to pay, right? There's got to be some models there. As you were speaking, I was thinking about this book I read called Snow Crash. Have you read this?
I know the book. I haven't read it, but I know that's the first book that coined the metaverse by Neil Stephenson. Yes.
Yeah. I mean, one notable, story within that is, individuals are walking around the metaverse and you can essentially determine somebody's level of affluence based on the quality of their avatar, right? And you got some super high fidelity, just decked out, beautiful aesthetic individuals walking around the metaverse, and then kind of like a fuzzy gray outline, just based on the individual resources to enter and engage. Yeah. Okay.
I think that's actually going to be very accurate, because there's going to be a certain quality or level of avatar that you can create for free. But there's a whole trend coming here for avatar wearables. And so you can create and buy like the Gucci handbag for your avatar. Right. And some people might think this is crazy, but the Gucci handbag, the NFT version, costs as much as the physical one.
It's crazy. Yeah.
Okay. It is crazy, but it's also not crazy. And this is why it's not crazy, because it's not part of a digital prison or something like Roblox or Minecraft, where the asset actually still belongs to the company. When you put it on blockchain technology, you have digital ownership of that asset. And if you know what the art world, they use a term called provenance, which is the origin, history, and authenticity of a piece of art, which is very hard to prove. But on blockchain, you can just look at the blockchain and say, yes, this bag came from Gucci. It was designed in 2022, January or February, and you can see the ownership history and what it's been paid for it. Now, why is that relevant? Because Gucci's only going to make a limited amount of handbags. You can see it came from Gucci, so it's not a fake. So if you buy it, you can wear it on your avatar, you can store it, or you can resell it. It's that virtual economy that's being created that makes it very worthwhile. So you can use it to create status like you were talking about in the book Snow Crash, or somebody else might want to buy it from you to create their own status, and you can make a profit on it.
Now, this is kind of a silly question. I understand. So if I can understand that, right, and I can understand the real world, so therefore why Nike wants to make their move, why Gucci wants to make their move, because they want to be able to sell accessories to the avatars strolling around. What the heck's what is McDonald's business plan? Are they going to sell virtual hamburgers? Like, how does that one's harder for me to wrap my mind around?
Well, I think it goes back to the point I was making before about communicating who you are. Sometimes it's not about sales, it's about advertising. And so McDonald's could create, as an example, an amusement park, a virtual amusement park where people go and do rides, and maybe some of the, the Hamburglar and some of these things are there walking around. What you're really doing is you're creating brand recognition amongst people in this new demographic. They're talking about Disney creating a metaverse. And I thought that was really cool, because for a lot of people, maybe going to the real Disney might be expensive, or you don't have the time. There's many reasons, but if you can experience a little bit about what that's like by going there, and you can see, the Little Mermaid and Aladdin and all these various things, you're building brand value. Your kid's going to be like, next time they're at a store somewhere, they're going to be like, I want that, or they recognize that, and maybe it's a trip in the future. So I think for McDonald's, obviously they're not going to be selling virtual burgers, although they might, but it goes back to creating longevity for your brand, because these people aren't watching TV where you're going to get the McDonald's commercial.
Okay, I'm with you. Now, you mentioned Disney is talking about building their own metaverse. The two metaverses that I'm most familiar with would be Decentraland and Sandbox, right? But, could we expect, Andrew, like Amazon, Apple, Disney to all, Facebook just rebranded their name, all to have their own metaverses in the near future?
1,000%. You're going to see a ton of metaverses, just the same way you have a ton of social media platforms. You have LinkedIn, you have Snapchat, TikTok, Instagram, Facebook. Like, there's going to be a lot of them. And I like that. Just like there's many video games out there. There's not the video game, there's video games.
Yeah.
If you were to look forward, 3-4 years, you're going to see that the metaverses create a niche. So somebody who wants to experience Disneyland will go to the Disneyland metaverse. I think there's going to be metaverses that are going to be workplace specific. So if you work in a sensitive area, maybe like a power plant, where there's interaction among several people and there's, severe consequences if people aren't trained properly. What if you could create a replica of that, and everybody could train under different scenarios together, regardless of where you are, without actually having to take the risks in the workforce? Let's think about higher education. Imagine you could get the best medical professors in the world to start doing virtual surgeries and lectures online, where the students don't have to be sitting in a classroom. They can be anywhere in the world to take those learnings to where they live and learn and practice, and then they can perform virtual surgeries. So the possibilities here are big, and I can go on and on with the various possibilities and uses. Think about, Amazon. Amazon hasn't really announced what they're doing, but they're thinking about it. What if you could go to an Amazon store, and rather than just getting a bunch of 2-dimensional pictures, you put in running shoes, and all of a sudden the space you're in transforms into like a running shoe store where you have the various brands. You can look at them 3-dimensionally. You can buy the NFT. You can buy the physical product. You can ask questions to a virtual salesperson. Think about the possibilities of that, of just creating a more immersive shopping experience. So really, there's going to be tons of metaverses, and the way we use them is going to vary. Just like at the early days of the internet, I didn't know I'd be booking, appointments, travel, having my food delivered. Who knew what was going to come out of the internet? You're going to see something similar in the metaverse. And as you said, there'll be some failures for sure. Luckily for us, we're not trying to create a company. We're trying to evaluate the people that are out there, buy those assets, make money from them, and give a pass through to our investors who want to get that exposure.
Right on. Okay. Now, the parallel my mind kept on drawing as you were speaking, because I imagine pushback from skeptics would be, well, if Facebook and Amazon and, anybody can create their own metaverse, then what's the scarcity? But, it's like saying that, I would go to Hong Kong for one reason and go to Mexico City for a different, reason, you know,
Right.
and depending on what the utility or the application of the metaverse might be, there will be some that are focused on high entertainment, right? Maybe fashion shows, concerts, dance music festivals, and maybe others. When I was first exposed to virtual reality, I remember the first compelling business model I saw was it was training for surgery, and you popped on the gear, and all of a sudden I was in the surgeon's room, and I'm cutting open somebody's arm, and I can see tendons and bone and muscles. And I thought, what a great training tool, right? You know, having to use a cadaver. This is infinitely scalable, right? And you can train students that way. So when is Johns Hopkins putting out their metaverse, and what do you do in there, right? It's different utility. It's education focused. Some will be networking focused. Interesting. Very, very interesting. Okay. Now, so what's your plan then as you see more? I mean, I guess you're not pigeonholing yourself in Decentraland. You're looking at where's the foot traffic going to go? Like, where do we expect volume?
Yeah, we're looking for the virtual foot traffic. We're also looking for the business opportunities, right? We're not sitting here collecting metaverse real estate for fun. We're trying to find ways to monetize it and generate profits from this. So, you know, we have a strategic relationship with Superworld, and Superworld's really cool. Superworld is like virtual tourism. So you can go check out the Taj Mahal or Mount Rushmore, you know, from the comfort of your computer in a 3D environment that you can walk around and look at it and look at, you know, what the size of this is relative to a human. For a lot of people, your family is like, I'm not taking my family to, you know, Mount Rushmore, but one afternoon, me and my kids might think it's a fun thing to go check it out, or other places in the world. So this virtual tourism is certainly, I think, an interesting area as well. I think for classrooms and virtual learning is another area. But, you know, our take on this is that as these new areas develop, we want to be at the forefront. We're doing a ton of due diligence. We're talking to, you know, the main players involved, and make sure we're investing in the right places.
So talk to me about what's next then, Andrew. If, you know, because I'm of that mind. Like, the reason I wanted to talk to you is because, like I said, I've made a lot of money investing in the proxies when I'm curious and excited, but don't have the time, or just haven't had the time yet to really be dangerous. You know what I mean? And therefore be aggressively speculative, which I like to be, but I'm not there yet here.
Right.
So what can we expect from you next? You've made some land acquisitions. Like, is there some news flow that we could look forward to? Talk to the investor in me now and say, here's what we're doing.
So I think what we're going to see is, you know, on the staking side, we're going to see our macro bets with the growth of DeFi and NFTs is going to continue to grow. I think that's an important part of our business. With the metaverse, you're going to see us continue to buy more land. We'll diversify into other metaverses and continue to develop real estate products for people. So I sort of talked about before, there's the digital advertising, there's virtual storefronts. There's also design and architecture services. Maybe there's brokerage services. And so as we look at this, we're going to aim to become a one-stop shop for brands that come and can give us a list of what they would like to get out of the metaverse that we can provide for them, not just in Decentraland, but in Sandbox, Somnium Space, Superworld, and the other metaverses that we're involved with.
How would you differentiate Superworld versus the Decentraland or a Sandbox? Is there enough going on yet to speak how they might differ culturally?
Not that I can speak to, but I think it's just going to attract a different type of person. Like I said, I view the different metaverses like various video games, right? Superworld is more virtual tourism. There is no Mount Rushmore or Taj Mahal in Decentraland. I mean, maybe there is if someone built it, but that's not the purpose. I think Decentraland is very focused on events. I think like this fashion show, other things that are happening there. You know, Sandbox is very similar, a little bit behind in terms of developing the ability to hold these events. But, you know, Adidas has invested there, as a Snoop Dogg. So that's a very cool one. Somnium Space is like the higher end one that's integrating in with like the Oculus and virtual reality gear. So the graphics on something like that would be superior, but again, a narrower access of people because not everybody has those headsets. And then something like Superworld, which is virtual tourism. So you can go there and look up various places in the world and go check them out with your avatar. So all slightly different, but all good. And I think for the people that I know that use metaverses, they're generally part of more than one. Just like social media, you know, I'm on Facebook, I'm on Instagram, I'm on LinkedIn. Other people, like my daughter, she loves TikTok. Some people like Snapchat. my mom likes Facebook, but she doesn't understand the other stuff. So they'll end up appealing to various people based on what it is you're looking for and what utility you want out of it.
If you were to speculate or like visualize for me, what does day-to-day metaverse interaction look like 5-10 years down the road, right? What are some things that come to mind?
I think people will stop using the term metaverse. It's just going to be part of this thing. So it's going to be like, oh, I have an office meeting. You'll log in, you'll go to a place, and you'll have a forum for you to do an office meeting that is far more immersive, or maybe with your headsets, where the avatars look more like you and you can talk, you can use hand movements and do various things. It's not going to be like, hey, I'm going to go to the metaverse. You're going to be like, oh, I need to go do some grocery shopping. You'll go to this special site, and using your hands or whatever, you'll be able to grab the things you want. It'll go into a box and then get delivered to your house. I think it'll be, school, as you said, oh, I need to get to class. You'll log on, you'll be in your classroom, and you'll be able to explore in 3 dimensions as there's an operation or something going on. So that's where I see things heading. Like, nobody says it anymore, I'm going to go onto the internet to book a flight.
Yeah.
Okay. People just say, I go to my wife and say, I got to go do some banking stuff. I come to my computer and do it. I don't say, I'm going to go onto the internet to log on to the bank website. That's what's going to happen. This is just going to be something that subtly invades the way we act and the way we do things, that improves the way we're doing things. I don't think it's going to increase our screen time. I think it's going to replace the screen time we're doing watching TV, social media platforms, and gaming. And it's going to transform those into an area that makes them easier to use.
That's such an important point to make, that you don't think this is going to increase our screen time, just replace our existing screen time. Because I think a lot of people, myself included, with 3 little boys, one of my fears is like, I don't want my kids absorbed 100% right in some digital universe. And what you're saying is like, well, the internet didn't do that. Maybe more than historic, sure, but like, we still live in the meat suit world at the end of the day.
Yeah, look, I have young kids and I see their friends. Some of the kids spend a lot of time on the screen, whether it's, watching movies or playing games or whatever it is. Other kids prefer to go outside and play with a ball. I think it's going to vary from person to person, but the utility of using the metaverse for things like learning, education, safety, shopping is going to evolve. I think the whole video game community is going to move into various metaverses. So think about, I was thinking about this, people play like the soccer or the football games. You could go in and create it so you're your own GM and you can trade players for money. You can make money off this, how good you're playing or with your team. So I just think it's going to evolve the screen time that we're using now from social media, television, into the metaverse and replace the things that we're already doing now, but it'll vary from person to person.
Yeah, I love that. Okay. Look, Andrew, okay, last question for you. For somebody who wants to educate themselves a little bit better on, what this world is and how it's developing, at the front end of the conversation, you're like, if you're still a denier, you need to educate yourself. Yes. Where would you point, and what kind of resources to somebody who just heard this conversation now they're curious?
You can go to tokens.com. We have a whole education tab at the top, and we've made some videos and have done a whole bunch of interviews. I think listening to this podcast is a good way to educate yourself as well. And Google, there's no book, there's no textbook or authority on this stuff. It's really being developed as we speak. We're making history every day in terms of what this looks like and how it's used. But the information is there on the internet. Start off by going to our website and continue Googling. There's a few reports. JP Morgan just put out a very large report on the metaverse. Credit Suisse First Boston put out, I think, a 250-page report on it. Every major, research house, investment banks are starting to educate people on this. So the information is out there if you look for it.
Okay, I appreciate that. Yeah, tokens.com. It just popped up on your site right now, actually, and had a look at the education page, and there's tons here to dive into. Look, Andrew, I appreciate your time and allowing me to hit you up with, probably from your perspective, are some pretty juvenile questions, but things that I'm trying to understand.
No, you know what? I spend a lot of my day doing this. I love these questions. I'm obviously passionate about it, and I'm really excited to be involved in this space.
I love that. And if you want to take a look at tokens, you trade on the NEO under the ticker COIN, COIN, and on the OTC under the ticker SMURF, SMURF. All right. Look, thanks again, Andrew. It's great chatting with you.
No problem. Thank you, Jay.
All right. All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, thanks again.